Hi everyone, Alex from Summerhill, just with another quick video update. In today's update we'll cover three key topics. Superannuation contribution caps and thresholds from 1 July 2025, our new fact find portal for planning meeting updates, and our updated bank account details for those paying by direct invoice. So firstly, starting off with superannuation contribution caps and thresholds from 1 July 2025. The data was released earlier this month, confirming that the annual contribution caps will remain at 30,000 for pre-tax contributions and 120,000 for after-tax non-concessional contributions. These caps will stay in place from 1 July 2025, but based on the data released this month, we do expect they'll likely increase from July 2026. Additionally, we can confirm that the general transfer balance cap will increase from 1.9 million to 2 million from 1 July 2025. This cap impacts two key areas. One, the amount that can be transferred from superannuation to a tax-free income stream pension, and two, eligibility for making annual and 3-year bring forward after-tax personal contributions. So from 1 July 2025, the total super balance threshold for making your after-tax contributions will increase from 1.78 million to 1.88 million. These changes present some new opportunities. So some clients may be able to make after-tax contributions in the 2026 financial year that they wouldn't have been otherwise eligible to make this current year. And deferring the triggering of a bring forward after-tax contribution until after 1 July 2026 could allow some to make larger contributions under those new thresholds. An important consideration with the change to the transfer balance cap is whether to start an income stream pension now or wait until after 1 July 2025 to access that higher cap. So for clients with a super balance of over 1.9 mil who have sufficient income to meet their needs until July, delaying the commencement of a pension could be beneficial. The potential tax savings over one's lifetime for accessing that higher cap can be significant, with a reasonably short sort of break-even period depending on individual circumstances. However, various factors can influence that decision, such as whether assets need to be realised in superannuation before 30 June. That can certainly change the outlook of the approach that you take. We'll reach out to those individually to discuss the best approach if this is relevant to you. Now moving on to our new Fact Find portal and planning meeting update tool. At the start of the year, we introduced a new Fact Find portal just to streamline the process for updating your information before our planning meetings. Feedback from clients has been overwhelmingly positive so far, which has really been lovely to see. Some are saying it's been the most user-friendly platform to date, which we are absolutely thrilled by. The tool is designed to make the planning meeting process smoother, and we welcome any feedback on any improvements that could enhance the experience. Additionally, we'll now be using the Summerhill client portal more frequently for delivering advice, documents and various communications, especially if it's containing sensitive information. We recognise that accessing documents through the portal might take slightly longer than just receiving them simply via email. However, we view this as a crucial step to enhance security and to protect your data. Moving on to our updated bank details. So for those clients who pay fees quarterly or annually by direct invoice, please note that our banking details have been updated as per the information in the invoice email to you. We appreciate the diligence of those who have taken some extra steps to verify this change, but we can confirm the update is legitimate. Now lastly, I did promise myself I wouldn't talk about Trump in today's video, but all I will say is this. Markets are likely to experience higher volatility this year as investors react to political developments and announcements coming from the White House. While it's good to stay informed, I encourage you not to sweat over every headline. Reflecting on Trump's first term, there was a lot of talk that ended up going nowhere, as well as policies that were adopted only later to be quietly dropped. It's important to have a steady hand during these periods and to remember to focus on the fundamentals of the economy. When markets overreact, as they inevitably will, that often presents opportunities. So that's it from me for today. If you have any questions or comments, please don't hesitate to get in touch. Thanks for watching.